welcome back to another episode of Get the Guac, a Harford Retirement Planners podcast. I'm very excited about our guest today, Alex Thomas, good friend, husband, father, home loan consultant at Main Street Home Loans. He's also a podcaster with the Spilling Realty podcast and world-renowned TikToker, the Maryland Mortgage Dad. So, Alex, thank you for coming on today.
Yeah, man, thanks for having me. I'm excited to be here.
Excellent. So I was actually on Alex's podcast, was it a few months ago?
Yeah.
So I'm happy to return, flip, I should say, the script and be on the interviewer, not interviewee side this time.
A little home and away series. I like it.
Yeah. So what I want to do is get to know you a little bit better, and then we'll talk about mortgages because that's definitely a very relevant topic in today's economy. So what I want to do is fire off 5 rapid fire questions.
All right,
We've got our minute to win it. So let's see if we can get the answers in under a minute. There's no penalty if we don't. But, all right, here we go. So number 1, best season of the year.
I like summer, and which is funny because I sweat tying my shoes. Anybody who knows me knows that. But just something about going to the beach, going to the pool, that kind of stuff.
I agree.
Barbecues, all that fun stuff.
Any of the other 3 seasons would be wrong.
Yes.
Beaches or mountains?
The beach. Yeah.
Perfect. Pizza or tacos?
Pizza. I'm a big pizza guy. Yeah, as you can probably tell.
Figuratively and okay.
Yes.
So, what is your favorite holiday movie?
Oh, good one. I feel like it changes almost every year. I want to say this past year it was Christmas Vacation.
Yeah.
Kind of went old school.
And I think I've turned into Chevy Chase's character. I am Clark Griswold.
You're the Griswold, yeah.
All right, last one. Favorite subject in school?
Biology.
Biology.
Yeah, I was a biology major in college, and as you can tell, I'm putting that to really good use right now.
Absolutely. So. The natural progression, biology to... We beat the clock. So biology to mortgage. I want to get back to that in a second. So I did a little recon, which is something that you did before I came onto the podcast.
Yep.
Quick story. I was listening to the episode on the Spilling Realty podcast, so make sure you watch that. And one of the questions was, I think, like a pet peeve of your spouse or something fun-loving, but and I was listening to it on my iPad, and Jane was in the same room, and it was the volume was up, and I was like, oh my gosh, I couldn't remember what I said because it came out a couple of weeks later.
Sure.
And she's like, what's the answer? What's the answer? I was like, oh my gosh, Joe, please don't.
Yeah.
So I turned it up, and she's got this home organization business, and I said my pet peeve is the organization's turned into like hide and go seek with all of our things.
Yep.
So I said, but I love seeing the creative side. She created a business out of it, so it's a win-win. So thank you for putting me on the hot seat
No
there.
problem. Yeah, it's what we do best.
You were sweating, tying your shoes. I was sweating watching this podcast. I had some cold sweats going. All right, so Alex, you have 3 kids. EJ,
2,
Riley.
Yeah. Oh, it's right.
And the cat.
The cat. Yes.
I hear you talk to the cat as if it is one of the children or human.
I do. And I feel like when people talk to dogs, sometimes the voice gets high and stuff like that. So we have a dog, too, an 85-pound lap dog named Lily. But I definitely, for some reason, feel like I have to talk to our cat, whose name is Susan. So it's a human name, right? I definitely talk to her like one of the kids. It's,
oh, my God.
It's very funny. And I was... I had some not really reservations. When we got the cat, we were kind of getting it for the kids, and I thought that she would just be like kind of part of the furniture, right? Because in my experience with cats in the past, I didn't have any growing up. Like people who had cats, you never saw them, but you certainly smelled them when you walked in the house, right?
Right.
So it's interesting, and maybe it's because she was raised by this Labrador Retriever who's like so loving that like she kind of has some dog qualities about her that are really adorable. So yeah, Susan the cat has been a great addition to the family over the last year and a half.
So what are some conversations that you have with Susan? What's a typical cat convo?
Hey, Susan, you really can't be, throwing your litter out of your litter box, that kind of thing. Please stop torturing the dog, because she does this thing where, like, poor Lily be like asleep on the couch or on the floor, and she'll just run up to her and kind of look at her and then just like bat her in the nose and then run away. So it's mainly about her behavior. Yeah. We have to straighten her out a little bit sometimes.
Oh my gosh, that's too funny. So is it true that when you were 10, you beat Michael Phelps in a swimming competition?
Yes, I did. And that was the first and only time. As you may know, he got a lot better, a lot quicker than pretty much everyone else who's ever lived. But yeah, when I was 10 years old, I beat him in the 50 breaststroke at the Maryland State Championships. Ever since then, he kind of took off, and the rest of us were left left in his wake, for lack of a better term.
So, of course, I'm sure that humiliating defeat led to a competitive nature that turned Michael into the winningest Olympian in human history.
Yeah, like, hey, this chubby 10-year-old beat me. Like, I got to do better. And I like to think I was part of his progression into greatness.
So, has he called you and thanked you for setting on a path of success?
No, we're not that close. We certainly had a couple conversations. I was on the same team as he was for a couple of years growing up. But yeah, ever since he got famous, I kind of lost touch with him.
I'm positive that Michael Phelps is a regular listener to this podcast, so I think it would make sense.
I think I saw him get the Guac T-shirt.
Yeah. Absolutely. So, Michael, if you're out there and you're listening, you got to give Alex a call here. What is it like to have peaked at age 10?
Yeah, good question. It's really been all downhill since then. Honestly, I swam throughout my college career. I had a choice to go D1 water polo or D3 swimming, and I kind of wanted to do the big fish in a small pond kind of deal.
Yeah.
I'm with you. It's been difficult, but I manage.
Are you still swimming?
Yeah, I usually do it once a week. So I'm on my Andrew Huberman protocols, as you can see by the black T-shirt and everything. So I usually do my long swims on Sundays. Yeah.
What's a long swim?
About 1.5 miles, 2 miles.
Oh my gosh.
Somewhere in that range. Yeah.
That's awesome.
Yeah.
Everything, it's so funny is not that I'm getting old, but we're getting older.
Yeah.
And running long distance, people, long-term runners, knees break down, things like that. Mm-hmm. And I always hear swimming is such a good low impact. I haven't really done it, but I hear it's a great exercise.
Yeah, the shoulders take a little bit of a beating, but nothing a little ice can't fix most days.
All right. So Alex, everybody's got something that's their own personal kryptonite.
Sure.
Is it true that yours is folding laundry?
Yes. I, for some reason, have no idea how to do it. Yes. I've never been able to kind of get the laundry the way I want it, and every time I've tried, it ends up more wrinkled than when it came out of the dryer.
Yes.
So I've kind of just given up on that. I kind of let my wife handle it.
Now, is that something that you've intentionally torpedoed the skill so that you don't have to?
Some may say that. However, I really just think it's just something with my hands, or again, like you said, I peaked at 10. So
right.
It's been a tough last 27 years or so.
You're right. We can't fault you for that. So would you rather defuse a nuclear bomb or fold a fitted bed sheet?
The fitted bed sheets, just ball them up and throw them in a closet. Yeah, I'd rather do that. Yeah, I'd rather
neither of it
die
matters,
trying to defuse the nuclear bomb.
Yeah, I hear you. All right. So you went to school for biology, and then something happened between that and mortgage. So tell us a little bit about how you got into the mortgage.
Yeah.
When was that? How did you get into the mortgage business?
Sure. So I had an internship in college at a sports radio station locally, WNST. And I really enjoyed that. I just kind of noticed that it kind of takes a while to get the income stream that you want from those type of things. Not everyone makes Mike and Mike in the Morning money.
It's more of a passion career.
Big time. Yeah. So I was kind of sick of living in my parents' basement. I was also coaching swimming at the time over at Calvert Hall, which is where I went to high school. And just said, hey, I got to find something to do here. And, outside of this. And I tried going back to school, maybe get a master's degree in biology, and I got halfway through that, and I was like, this really isn't for me. I don't want to be stuck in a lab for the rest of my life, and I'm not going to medical school.
Right.
So I ended up just, doing the old Baltimore thing, right? Talking to your friends and talking to their dads.
Sure.
And I got hooked up at a big bank in the area. I did business banking for a couple of years. Well, I started out doing subprime loans, actually. So let me rewind a little bit. We were doing subprime FHA loans.
When did you get into that?
2009. So right after the crash.
Yeah, probably. Yeah, great timing. Sure.
Yeah, and we'll get into the market and stuff like that too a little bit later, I'm sure. But it was subprime credit cards, using people's cars to consolidate debt, that crazy subprime stuff, right?
I had a friend that did that. It's where you take your car's equity.
Yeah.
And you can borrow against it.
Yep. And back then you could borrow up to, I believe it was 160% of your car's equity, which you being a financial advisor, probably wasn't the best fit for a lot of people.
Yeah. Over leverage a depreciating asset. What could go wrong? Sure.
Yes. Yeah, exactly. What could go wrong there? So that really reminded me of, I don't know if you've seen the movie Boiler Room.
Yes.
But it was very much that kind of atmosphere, right? So I kind of got sick of that after 2 years, after being really excited for the first 6 months. Kind of got sick of it after 2 years, and then I followed.
Did they? Not to cut you off, but was that when you met with them? Were they income's, unlimited, and if you're even average, you're going to make, and they throw these numbers out there.
Yes.
And you're young, and I think when you're young, you're money hungry. The goal is to make a bunch of money.
Yeah.
As you get older, things change, and there's a lot of financial industry things like that. I remember at the first place, I was only there for like 8 weeks.
Yeah.
That was the same thing. Like if you hit average numbers, and it was very much, dial, putting plans together. And I'm like, well, how does this make sense for the person to bring in? They're like, don't worry about that. Just
Right.
get back on the phones and set another meeting.
Yeah.
So
Yeah, very, very similar to that. And I kind of didn't get a good feeling kind of some days after I was coming home from work. So,
yeah,
and I think neither did my mentor at the time. So he decided to switch over to the retail bank, which is a whole nother can of worms. I did that for about a year before I got into more of like a commercial banking role
right.
there. And then one day, you become friendly with the people who come in who work for different parts of the company. And as a bigger bank, they had their hands in every cookie jar possible, right? So
Right.
we had a couple mortgage guys come in who I got friendly with. They took me out to dinner one night at the Prime Rib downtown. We had a really good time. They talked to me about the mortgage industry, and I started, that's when the wheels started turning about, hey, maybe I could do this instead. I did
what
like
year
the 9
was
to
that?
5. So that was 2013.
Okay.
14,
So
somewhere in that
then
range.
obviously the 08, 09 debacle had started to settle out.
Yeah.
Things were kind of getting back to normal.
I just missed that. Yeah.
Yeah,
So I
well-
got in like right after all the shit hit the fan, for lack of a better term.
Right.
Yeah.
So, and then for the average home buyer, consumer, first time, second home, third home, whatever it is, I think there's a lot of confusion out there for the different types of lenders.
Yeah.
Like I know in the financial planning world, you've got insurance companies, you've got banks, you've got independents, which is where we fall into. What are the different types of lenders out there? Can you describe the categories?
Yeah, sure. So the way I see it is you kind of have your big box lenders, which come in a couple different flavors, right? Like the bigger banks, the larger institutions, places like Rocket Mortgage and those big, online entities that
Right.
lend a lot of money. And that's not really where we fall, and we're more along, I guess, in line with your business, right? It's more of the local expert with a local team in place. And we don't work a 9 to 5, right? We don't do the suit and tie game. We don't do any of that stuff. It's
Right.
more of a family kind of atmosphere, and it's something that I've really grown to love over the past couple of years.
Yeah, I think if anything, COVID sped this up, but
Yeah.
people aren't so much interested in do you have like a 3-piece suit and the watch and all that. I think people are like, what do you know? How can you help me? That
Right.
one of the positives I think that has come out of all this is I think people really just want that relationship and connection and just, hey, you know what you're talking about. How can you help me best?
Right.
Right.
And they know where to find us, right? Like, once, not only that, once their loan gets into underwriting and processing, like it doesn't, disappear into the abyss. Like we have control over the file the entire time.
Yeah.
Which is a big advantage for, especially those more complicated files.
When Jane and I bought our first house, it kind of came pretty quickly. And we went with a real estate agent we met through an open house.
Right.
And she said, well, if you don't like this place, I got other places we could show you. We were like, all right. So we looked at houses. We were, I don't know, in our early, mid-20s. I know financial planning. I didn't really know real estate. It's a whole separate beast. Enough to be dangerous, but not enough to do it. So she ended up giving us the lender that she recommends. But the challenge I had was I didn't really know her all that well, and I didn't know the lender all that well. And there's just going to be something that comes up in every real estate transaction.
Yep. There's always something.
An appraisal, a loan, or a bank statement where I don't know, whatever the thing is. I think it's so important to have that trust in the team because at some point the deal, you're just gonna have to put your hands up and say, I'm gonna have to trust my team to handle this so that we can close, timely and without, undue expense or whatever, right?
Yeah, and just like in all business, people want to do deals with people who they know, like, and trust.
Yes.
And I think real estate's no different. Other than the people who are just like so hung up on little things, not like interest rates a little thing, but people who are just rate shopping to death and like just always want to get the best deal. That's probably not the best, client for us, right? We're more of the relationship type
Yeah.
type of institution.
Well, you could play with the numbers
Yeah.
any different way. So, and I think the average consumer, there's so many levers you can pull in the mortgage world that you show somebody a rate that seems like too good to be true. Well, in life, usually it is.
Right.
There's a button they're pushing over here where the average consumer might not understand, or even above average consumer.
Yeah.
So it's difficult also in our world. Someone say, well, this person said that they could get me X% more. And they're looking in the rearview mirror, they're back testing portfolios. And just because it worked 10 years ago doesn't mean it's going to work today.
Exactly.
And I think at the end of the day, what's the goal here? Get a fair rate, get the home that you like, that you can afford.
Right.
And the rest of it is important, but it's not essential.
Yeah.
Is your goal to beat the stock market, or is it to retire comfortably and securely?
Right.
Sometimes those different goals can compete against each other. Maybe
Yeah.
like the lowest rate, you're like stepping over dollars to try to pick up pennies sometimes.
Exactly. Yeah. Oftentimes the lowest rate comes with the highest fees. And that's why I tell people all the time, they're like, well, I want the best rate out there. I'm like, okay, great. You can get that, but it's going to cost you 10 grand more.
Yeah.
So it's like, where's your break even point? Like, how long do you plan to live there? Right. Those are the conversations that we like to have with our clients instead of just like, throwing a number out there. In fact, especially recently, we don't even get into the interest rate conversation until probably the second or third phone call or meeting. A lot of times it's just focusing on the payment, because the payment's obviously at the end of the day kind of what drives your budget.
Right. Are interest rates a relatively commoditized? Everybody's on the secondary markets.
Yeah.
Everybody's looking at the Fed, what the Treasury's doing. I would imagine with computers, it's not like, the old school days of it's all relatively the same. Maybe there's some proprietary things that pop up as like an incentive, but
Sure.
Everybody's looking at the same marketplace.
Yeah, we're all playing with the same deck of cards, and it's all
Right.
about how you package it, and the closing cost side of things is super important too, right? So that's where we often kind of just try to make sure everyone's, I guess, focusing on that stuff, right? What's your budget for your down payment and closing costs? What's your budget for your payment? And let us figure out the rest for you.
Right. So let's go back to big box lenders. I don't want to speak for you. I would imagine a benefit might be, I got a Bank of America checking account. I'm just going to call Bank of America. What are some of the pitfalls of going with maybe one of those convenience path of least resistance options?
Sure. I think the main one is again, even if the loan officer is doing a great job, once that file gets into underwriting, their underwriting could be in Albuquerque, New Mexico, or Montana, or Charlotte, North Carolina, right? And oftentimes, real estate's very hyper local. Right.
Right.
So we have something in Maryland that's kind of not unique to the market specifically, but it's not found in very many other places in the country. And it's called ground rent or leasehold. Right.
Yes.
So if you send a contract with ground rent on it to an underwriter in Montana, they're going to have no idea what the hell they're looking at.
Right.
And it's going to cause a delay in your settlement, which could cause you to lose the house.
Right.
So that's the number one thing. The other thing is, with those companies, a lot of times when you call that number, you're not going to be talking to the same person every time.
Right.
And they tend to work like a 9 to 5 or an 8:30 to 4:30, right? Whereas
Right.
like if I'm at my kid's soccer game and I get a phone call from you, like I probably won't answer it right there, but I'll text you right back and say, hey, I'll call you in an hour.
Right.
Right. And that's really where the big, I think, difference sets in is the service side.
Yeah. As I've gotten older, I have realized the immense value in outsourcing to experts who do it right.
Right.
Every time I try to do it myself and I'm quarterbacking a real estate deal or whatever, I end up putting so much more effort into it, and I'm just not a professional in that, and I don't do it service.
Yeah.
There's a lot of hard-headed people that are the do-it-yourselfers out there. Maybe
Yeah.
and there are people that love negotiating with car dealerships.
Oh, yeah.
That they enjoy that, but for the 99% of other people, I
Right.
think let the pros do it.
Especially the older generation, they really like to haggle with you and stuff like that. I think it's a sport to them in some aspects.
Do you think the younger generation is better at outsourcing?
I think so. Yeah, because they value their autonomy a little bit more in their time, right?
Yes.
And they don't necessarily want to drive to your office to argue with you for an hour and a half.
Right.
They'd rather just talk to you for 30 minutes on Zoom or on the phone or whatever, and then
Yeah.
get the information they need and then get on with whatever else they're doing.
So in our neighborhood, we have, I call them the 1.0s, the original owners. They've been there for 20 years. And we have the 2.0s where younger families is turning
Sure.
over.
Yep.
The 1.0s give me a grief all the time because I don't mow my own yard. Pay guy, and he's been with me since I had a townhouse.
Sure.
So
Yeah.
I get how they'd give me grief over that.
Right.
But they're like, Joe, it's not even that big of a yard. I'm like, I just don't want to.
Yeah.
I'd rather be at soccer
Right.
or, 100 other things. Smelling
Yeah.
like gasoline. I feel the same sense of satisfaction looking at the yard that's been mowed by somebody else as if I do it.
Yeah, absolutely.
So,
Yeah, as long as they're doing a good job, that's all that matters.
and Kyle knows what he's doing better than I do. So
Right.
I probably have like lines all screwed up. And
Yeah.
who knows, but
Yep. It's like folding laundry for me. Yeah, I'd have a patchy lawn and all kinds of stuff if I was doing it myself.
Oh my gosh. Wrinkled bed sheets and a patchy lawn.
Yeah,
So
it's not a good look. Yeah.
So let's talk about the current mortgage environment.
Sure.
Rates are up,
Yep.
and it just stinks for pretty much everybody,
Yeah,
except for Powell.
It priced a lot of people out of the market. Yeah, I don't know, man. I think Jerome Powell, maybe part of him, kind of gets off on this stuff, but he has a lot of enemies out there right now.
Yeah.
So
I think he's raising interest rates to slow the economy so that we don't have hyperinflation. It's
Right.
a job that I do not envy at all. But whatever reason, we're in a higher interest rate environment, and so tell us what that means for the last year or so for the mortgage industry.
yeah, transactions are down across the board, right? I think a lot of people are doing maybe between 20 and 50% of the business that they're used to doing.
Right.
Yeah, it's priced a lot of people, especially in that first-time home buyer, sector, out of the market for the time being. Now, there's another set of people who have just chosen to remove themselves from the market, even though if they really look at the numbers, the payment makes sense. They could do it right now. They
Right.
just don't want to, right? They're too caught up in trying to time the market, which I'm sure you have conversations with your clients about a lot, right? It's not about timing the market. It's about time in the market.
Right.
So that's kind of what we're preaching right now too, because look, when rates drop to the fives, which they will, right? We have some pretty good data that, again, we don't know when exactly, but it's going to happen.
Right.
That's going to bring millions of homeowners off the sidelines and back into the game. And then with the supply chain issues and all this other stuff going on in the building industry, it's going to take forever for inventory to catch up. So we're going to see most likely those pandemic levels of demand again. So just basic economics, right? Supply and demand, that's going to keep home prices going up too.
Right.
So I think that people who can afford to buy a house now, right? It's a different story if you can't. You don't want to force it and be house poor. But if you can afford to buy a house now, you're going to have a much easier time doing it as opposed to 18, 24 months from now when rates go down. And then you're going to end up with the same rate as everyone else anyway, because if you're buying now, it's a first step in a two-step process, right? The first one, secure the asset. Then when rates drop, we'll refinance you.
So I've heard the phrase, which is super cheesy, but a piece of me does love it. Marry the house, date the rate.
Yeah.
Do you agree with that?
Yeah, to an extent, I'm with you. Like, I think it's a little bit of a cheesy saying, and it sounds catchy, right? And it sounds good, but yeah, the house is really the main asset here, right? That's what we should be focused on. It's because you can't really control the rate all that much, right?
Right.
You can do some things, like if you want to pay points for a lower rate, great. I mean, I don't know why you would do that right now if you're going to refinance it in 24 months, but that's kind of what we're preaching, is try to keep fees low right now, just so.
Have you ever talked somebody out of buying a house?
Yeah, we've had to have some tough conversations, and even during the COVID pandemic, when rates were in the twos, like we had to talk people out of refinancing because for a lot of them it didn't make sense. Like my parents wanted to refinance; their house is going to be paid off in 5 years. I'm like, what are you doing? Just pay off the house.
Right.
Like, there's no need to.
They're like,
do
no,
that
we
again.
want a 30-year mortgage in the twos.
Yeah, exactly.
Because it sounds good.
Yeah, it does. It does sound good, and everyone has that, like the neighborhood where they're talking about, it, and everyone's trying to compete over who has the lowest rate, right? And some people may not be as honest as you or I would be when they're talking about that stuff. So yeah, I got 1.75%. It's like, well, you probably didn't get that. But yeah, it seems like it's almost like a competition as to who has the lowest rate.
Yeah. I think we've had conversations, in our practice. A lot of times, I'll put it in other ways. It's not talking people out of, investing money. It's talking people into spending it.
Yeah.
A lot of times, a lot of the people that work with us, they have these assets, and we're pushing them. Hey, now's the time.
Yeah.
If not now, when? Go enjoy it. Make the experiences with your family. Go to Disney.
Yeah.
Right.
Yeah, absolutely.
So we were talking about Disney earlier. So one of the popular strategies I've heard recently is a 2-1 buy down.
Mm-hmm.
Can you briefly describe what that is and maybe a situation where it makes sense or it doesn't?
Yeah, sure. So a lot of times this will come where you have some seller concessions, right? Because that's kind of where this money comes from.
Right.
And the 2-1 buy down is essentially you would get an interest rate that's 2% below the market the first year, 1% below the market the second year, and then back on year 3 you go back to the high 6s or 7s, whatever you're at right now.
So it would fall into what an average 30-year fixed rate mortgage would be in that third year.
Right.
Okay.
Yeah.
So it isn't higher or lower. It's right in the where it would probably be anyway.
Exactly. Yeah. And then you would, the theory behind that being that, at the end of that 2-year period, we should be in a position to refinance you for a better rate than what you would, be going to in that third year.
Right. So we hope / expect rates to drop within 2 years.
Right.
You refinance. You're not going to get stuck with that, but you could.
Right.
And so the drawback is you just have to make sure that you're comfortable with what that rate could be if things go up and rates don't drop as quick as everyone hopes.
Yeah, and even though your rate will be lower for the first 2 years, we still qualify you off of whatever the market rate is for that day. So that way, you're still in good shape, right?
That makes sense.
If that were to happen.
Let's pretend I'm a third grader. Explain points to me.
Sure.
And where it does or doesn't make sense.
Yeah. So all points is it's a fee that you pay your lender to lower your interest rate. That's really all it is. It makes sense for people who have a longer time horizon in the home, right?
Right.
And really, right now, it doesn't make a whole lot of sense to pay much. Just because if you're going to have another set of refinance fees in a couple of months, like why would you shell out the money to do that now? Just as long as the payment makes sense,
right.
Like why would you spend a couple extra $1,000s to save $50 a month? Because you got to remember this too: for every 8% difference in your interest rate, it's $8 a month for every 100,000 you borrow.
Say that again.
So for every 1/8% difference in the interest rate, the change in payment is $8 per month for every 100,000 you borrow. So it's not like by saving 0.25%, you're not really that shouldn't make or break your decision to buy the house, I guess is what I'm trying to say.
It's not moving the needle as much as people kind of think.
As they think, correct.
A little bit of a vanity metric at times,
sure,
for people, or more so than people give it credit for.
Yeah, no doubt. And then of course, over 30 years, 360 payments, that really adds up to a lot of money. You got to remember though, most people aren't going to live in their house for 30 years, especially if it's a first house. Right. And even if you are living in that house for a while, there's a very good chance you're going to need a new mortgage every 7 to 8 years. That's just what the data tells us.
That's the average.
Yeah. Either for, cash out for home improvements or for school, right. Paying for tuition, going on vacations, going to Disney, that kind of stuff. So right. Yeah, for whatever reason, people seem to need to touch their mortgage every 7 to 8 years anyway. So,
do you guys do reverse mortgages?
We do. Yeah. We have a reverse mortgage expert on staff, which is great because I don't know a ton about them, just enough to kind of be dangerous. But yeah, he has experience in exactly what you guys do. He was a financial planner for many years. He retired from that and decided that he wanted to work alongside his wife, who's a loan officer like me. So we brought him in to be our reverse mortgage specialist.
The reverse mortgage guru. I've heard. I like this phrase because I think there's a lot of connotation with reverse mortgages that you get kicked out of your house when you're 80, which isn't right. The case.
It's not, yeah.
There's been a lot of updates. Somebody referred to it as tapping into your housing wealth.
Right.
I don't know why, but I think, well, of course, that sounds better than getting kicked out when you're 80. But
yeah.
I thought that was interesting. I don't know. I haven't come across a situation where a reverse mortgage made sense. But typically, a lot of the wealth we work with, people have outside their home.
Right.
It's not the bulk, but I don't know. I'm of the mindset that, I would rather have much more tools in the toolbox mm-hmm. than I need because you never know when that one thing's going to make sense and you're glad you have it.
Right. Yeah, no doubt. And a lot of people, equity right now has never been higher across the country. So
right.
So a lot of people are sitting on a lot of money that they can't necessarily access. So a reverse mortgage is one way to do that.
I was talking to someone today, and they were talking about equity goes up, interest rates were like nothing,
right?
And people take home equity lines of credit. Now all of a sudden, these home equity lines of credit tied to prime, some way or another.
Sure.
And so now the payments could be, way more than they were before because instead of 3%, now they're up to like 8 or whatever.
Yep.
What options does somebody that borrowed against and has a tough time making those payments? Are there ways to fix that rate or to stretch out like the loan instead of having it be floating? Like what would you say to somebody to start exploring if that's the case?
Yeah, where if that's a major pain point for them, right, or just other debt in general, I think I mentioned it, equity was as high as it's ever been. Credit card debt's also as high as it's ever been right now,
Right.
Across the country. So yeah, for people in those situations who are struggling with those type of things, you may want to look into a 30-year fixed mortgage to kind of tie all that together. Even with
Right.
rates in the 7s or 6s right now, it still might make sense for you from a monthly payment standpoint, and free up some cash flow for you to do some other things like save more for retirement, go on that trip, whatever the case may be.
Right. Refinancing does not probably make sense for anyone right now,
Yeah,
unless maybe,
not for many people. Yeah,
I mean, maybe you got a home in like the 80s when mortgage rates were like 12%.
Yeah.
If you're stuck with that, but when do we start to look at refinancing? What are some of the we're painting with a broad stroke. When looking at refinancing, when do we start to think, hey, this makes sense to explore more?
Yeah, a lot of people have like this magic rule of like, oh, it's got to be 1% or more right off of my current note rate, which I think there is some validity to that. But really, it's when things become too painful, right, in other areas of your life where hey, it might be time to try to repackage all this debt into the house, because there are some tax benefits to that as well for some people. But that's really when it starts to kind of make sense. And then obviously, everyone who's bought a house now and over the past 12 to 18 months, when
Right.
rates get into the 5s, it's probably a good time to start kicking the tires and seeing if it makes sense to do that. But again, if you're going to move in a year, right, you may not want to refinance at that point in time.
Right. So what are the main factors? Interest rate,
Yep.
your timeline,
Yeah. Equity position.
equity.
Yeah, and then your other debts, and the other, or if you have other goals, right, like you want to,
Right.
put an addition on the house, renovate the basement, something like that.
A lot of the conversations I have with people day to day, there's this fixation on the credit score.
Yeah.
How important is your credit score to being approved for mortgages?
It's really important, especially if you want that best rate possible, right? Fannie Mae and Freddie Mac have these things called loan level price adjustments, or LLPAs, and they recently got a little bit more strict. About 2 years ago, it used to be 740 plus was like A1 credit, right? Now there are some there's some more tiers above that 740 cutoff mark, but for people who have less than perfect credit, there are still good opportunities out there for them, right? Like
Right.
You don't have to have 800 credit to buy a house. There are programs for people with 580s.
Right.
It kind of all depends on where you're at and what your situation is and how long it takes to fix that credit mistake, right?
If somebody comes to you, they've got a less than desirable credit score and they're just kind of priced out. What advice do you give them to help put themselves in a better position for a mortgage in the not too distant future?
Yeah, well, I think it kind of depends on like if they need to buy a house right now, we kind of look at it like in a short term, like 3-6 month kind of thing. Is like, can we do anything here with
Right.
paying this card down, opening maybe a new card, just something to maximize their score. If it's anything longer than that, that's more of like we'll run a credit simulator. We'll sit down and say, hey, like, look, this is where you are, but in 12 months, if you do this, you'll be here, right?
Okay.
24 months, if you do this, you'll be here, right? And just kind of try to coach them through, how credit scores are generated. We get a lot of questions about like, hey, does applying for a mortgage hurt my credit? Like that kind of stuff. You know? So that's a really good opportunity for us to, again, kind of set ourselves apart from some of these big box lenders and really we should kind of shine through education.
Now, if somebody's shopping around different lenders and you get, what are they called? Like hard credit checks?
Yeah.
Is that the right term?
Yeah.
I know a lot of people are so afraid. This credit is like this mythical thing that they are just so almost obsessed. Maybe that's a strong word, but
I think it's appropriate.
they don't want to have a credit check when they're ready to buy the house. It's like, I only got 1 or 2. Does it really matter if you get like 3 or 4 credit checks in the same time frame for the same transaction? Does it really matter?
Yeah, that's a great question. So no, it doesn't. The credit bureaus look at mortgage as good debt. So they give you actually a 30-day window where you can get your credit checked for a mortgage purpose as many times as you want, and it doesn't penalize you. Now, when that happens, keep in mind, like, Equifax, Experian, TransUnion, they have these big buildings in Cleveland, Ohio that cost a lot of money. They have a lot of employees. So if you are getting your credit checked for a mortgage purpose, there's a very good chance if you haven't opted out of those solicitation calls, that your phone and email and your text messages are going to be blowing up for the next 3 weeks, because the credit bureaus sell trigger leads to banks who pay for them.
Really?
Yes. So if and people out there who have bought a house recently, they've probably experienced this. So we always, make sure that as part of our initial process with the clients, be like, hey, if you don't want your phone blowing up, and you don't want, people calling you at 10 o'clock at night,
right?
It's probably good to go to this website and just opt out of the solicitations.
Okay. And, what website is that?
I can look it up for you. It's like optoutsomething.org.
All right. We'll probably put it up on the video.
I'll send it to you guys.
Okay. I had a follow-up question. What was it? So Fannie Mae, Freddie Mac, they're selling your phone number, you're getting solicitations. I think the same thing is true of life insurance.
Yeah,
so
big time.
They call it like mortgage insurance, where, whatever the balance of your mortgage is, term life insurance, check this box, and people think, oh, I need that.
Right.
You might, but I would say contact a professional, not just a letter that you get in the mail.
Yeah, exactly.
First-time home buyers. So a lot of education, I think, for first-time home buyers.
Yeah.
Let me talk you through what I hear a lot. First-time home buyers feel that they need to save up 20%, which with today's higher prices is like a almost impossible task for most people.
Right.
What other options are out there? How do you coach a first-time home buyer and make it more accessible?
Yeah, I mean, for the people who have the 20% down, it's great, right? Like,
right.
Go with it all day if it makes financial sense for you. But if you don't, you got to remember, like, there are a lot of programs out there with no money down.
How does that work?
So it's not just with the VA either, or USDA, which are, all 0% down. So if you're a veteran or you're buying in the countryside somewhere that's on the USDA map that's zoned that way, right? Then there is no down payment required. But nowadays there are even some programs through the state, through Baltimore City, through some, Harford County has a program, Dundalk has a program. A lot of local areas will have some grants and loans that can help you match the minimum down payment, which for conventional loans is 3%, FHA is 3.5%.
Is that something that we're supposed to know as a consumer, or would someone like you be able to help us navigate all the different programs out there?
Yeah, that's a great question. So I think a lot of people come to us saying, hey, I heard about this program for teachers, right? And it's like, perfect. Like, yeah, that does exist, or no, it does, but it's a little bit different, or like, no, I've never heard of that before. Right. But yeah, that's kind of where we come into play is we have access to all that stuff. So we kind of, look at it like a doctor would look at a chart, right? And say, okay, well, this person only has this much money saved. They need this much to get the house they want.
Right.
What's out there right now? What do they qualify for? Based on, credit score. Some have income limits, right? So you can't make too much money to qualify for them. But some don't. Some are just true grants that you never have to pay back. And as long as you live in the house for 5 years, the money just disappears. So,
right.
Yeah.
PMI. It's like a 3-letter acronym that
Curse
people avoid like the plague.
Yeah.
Is it really as bad as the public thinks it is?
So I think for good reason, PMI kind of got a bad rap. And I just like other insurance companies, they all have these charts and tables and actuaries that work on this stuff. And I think they've done a really good job recently, because the companies that set this stuff are separate from lenders.
Okay.
So they've gotten really good over the past couple of years of kind of dialing in their pricing to make it like super competitive. So nowadays, PMI is not something that should scare you, especially if you have very good credit.
Right.
And in a lot of cases it's cancelable, right? So that's the other thing, is it doesn't last forever.
Right.
So the penalty sometimes can be even less than your homeowner's insurance policy.
Right.
Every month. So no, it's not something that I would say should scare people away from buying a house, but it's definitely something you want to talk about with your lender, because if you're just against paying PMI altogether, well, we do have programs for that, right? You can buy it out up front. You don't have to pay it every month if you don't want to.
Okay.
And so yeah, there are just some different ways we can kind of massage the mortgage insurance side of things.
Isn't there? So I love the real estate catchy phrases, right?
Yeah.
So
there's a lot of them.
Marry the house, rent the rate, or date the rate. There's something. Help me remember it. It's so like with PMI, where 100% of PMI is expense, but 100% of your rent
Yeah,
is expense.
exactly. Yeah. So the interest rate on rent is 100%.
Right.
Yeah,
That's it.
that's the one we're hearing a lot now.
Yeah, it's like I don't want to pay PMI, so I'd rather keep renting forever with
Right.
no chance of equity or paying down loans and things like that.
Paying someone else's mortgage instead of yours. Yeah.
I think sometimes, people have good intentions, but they get these things stuck in their head, and sometimes it creates a situation where they're, I don't want to say their own worst enemy, but they're working against themselves.
Yeah, 100%. Because their uncle told them something, who bought a house
Yeah.
15 years ago and doesn't know what things are like now.
Right.
Or they read something online that wasn't 100% accurate. Right.
Right.
And then they get these ideas in their head that,
Sounds familiar.
Yeah, a lot of people don't research the research and figure out that
Right.
that some of that stuff they read or that they've heard isn't necessarily true today.
Right.
Or maybe wasn't even true back then.
Yeah, it's mortgages are confusing.
Yeah, for sure.
There used to be a couple of versions. Now there's like a gazillion versions.
Yeah, there's a
and
ton.
One person you hear, this guru says this, and this other person says something else, and it's for the school teacher, firefighter, even some bankers. Like, it's how do you navigate that?
Yeah, it's tough because again, like your people come to you with preconceived notions sometimes that,
Right.
and it's really hard to kind of to break those.
Right.
But I think the best thing you can do is to build trust, right? Because I think people make a pretty good determination of you in the first couple of seconds of meeting you, even
Yes.
if they're going to trust you or not.
Right.
So we really try to establish trust up front, and then we build that trust and let it grow through the education phase,
Right.
and through just proving that. A lot of people don't even know how we get paid, right? It doesn't
Right.
it doesn't do me any good to give you a higher rate or to screw you over, right?
Well, maybe talk about that. How do mortgage lenders get paid?
Yeah, a lot of people don't know anymore. So there are some places that still do, the bigger box places will do like a salary, right? For some people, especially if they're just answering the phones. But the vast majority of us just get paid based on the loan amount.
Okay.
So there's, it's a percentage of that, and that can vary anywhere between, if you're at a call center, like 35 basis points to 150 to 200 basis points. Again, depending upon how your team's set up.
Okay.
Yeah.
Is that aligns the home buyer and seller? I mean, the goal with the transaction is to complete the transaction.
Right.
And as much as real estate agents play a big part, the mortgage lenders kind of, making a lot of the financial stuff happens, which drives a lot of it. So everybody is aligned to making sure that a deal closes as smoothly as possible.
Right.
So if you only get paid when things close, I think that's probably a barometer of a success, or maybe something went wrong. That's out. But yeah, everybody's working towards a common goal of let's close the house and, everybody in good shape.
Right. And if your lender did a good job up front, once you get the contract, the rest of it's just fact checking. Like there's not really a whole lot of additional stuff that you need to do. Now, from the client standpoint, like, you got to fish out some documents and you got to write letters and do all this stuff. But most of the hard work's already been done up front, right? There really shouldn't be a reason to panic, after you go under contract.
People have a really tough time getting that information, right?
Yeah, they do, and until
they fight it too, probably, right?
Yep. Until the deal's about to fall apart, and then they, for some reason, they tend to get faster with responses and things of that nature.
Do you ever have people that fight you? Why do you need my social security number?
Sometimes, but again, that's more like the educational piece. It's like, look, we're not doing anything with it. We can't, right? Even if we wanted to, but the social security number thing is that's how we check your credit. Right. That's really the only reason.
Right.
So.
It's a deal breaker.
Right.
Do you want the house to sell or buy it or not?
Right. You kind of need that stuff.
What questions should a buyer or seller, I guess a buyer really, ask their lender? What should people be? I'm sure they're like, what's the rate? But what should they really be asking?
Yeah, because what's your rate is probably not the first question you want to ask. It's how do you work?
Right.
How are you going to communicate with me?
Yes.
Especially if you're in a unique situation where, like, hey, like I don't have, like, we don't have a lot of money, or a lot of our money's tied up in the equity of our house. Like, how can you help us? Right.
Right.
So those are the kind of conversations we should be having, I think, up front, and that's kind of where we try to steer people if they come to us with, like, what's your rate, what's your fees, and it's like, well, hang on, like, the rate could be anywhere between 6.5 and 8, like, pick one, like,
right, yeah.
You know what I mean? Like, it's kind of up to you, honestly. It is in some aspects.
It's almost that. Do you want me to tell you what you need to hear, or what you want to hear?
Right.
And what you want to hear is not going to actually have a good, successful transaction.
Correct.
Sometimes.
Yeah, and a lot of places, especially nowadays, when there's blood in the water, there's a lot of competition out there. For every deal is being fought for. You know, a lot of places will just tell you what you want to hear up front. And
Right.
then, oh, by the way, 2 weeks before closing, we forgot to tell you there's 2 points involved in this transaction or
Right.
something like that, right?
Yeah.
Just because, so yeah, they may have beat us on the rate, but like you probably didn't want to pay those 2 extra points. And by the way, we could have done that for you too.
Right.
We were just honest with you up front.
Right.
So,
Yeah. Interesting. Well, Alex, thank you so much for coming on the podcast and sharing your knowledge on the mortgage industry. It is such a confusing industry for a lot of people. So that definitely added some clarity. I appreciate it. So Alex, home loan consultant, where can we find you? If people are interested in reaching out, how do they contact you?
So I'm at Maryland Mortgage Dad on pretty much all socials, and Alex Thomas on Facebook. That's the only one where I'm not. My cell's 443-326-8970. That's the best way to get in touch with me. And yeah, thanks for having me. And the office is beautiful. I love the podcast studio too. Everything looks great.
Thank you. Quick story. So compliance, we had piles of cash over here.
Oh, okay.
Compliance didn't like it because it assumes that cash is piling up. But I said, how do you know that the pile didn't start higher and we're actually getting smaller there?
Yeah.
Where's the context?
Right.
But that's compliance.
That's a good point. Yep.
So anyway, thank you everybody for watching listening to another episode of Get the Guac, Hartford Retirement Planners Podcast. Thank you very much.